Welcome back. You're watching Power Breakfast on CNBC TV18. The stock on our radar would be L&T. Sebi has advised the company against the buyback that they announced. Anisha, give us the details. Would the street really be worried about this?
Well, yes, it will be a tad bit of sentiment dampener for the stock today because, as you mentioned, Sebi has advised L&T not to go ahead with the proposed buyback. Now, remember, in the month of October, the company had announced a 9,000 crore buyback at a price of 1475, and since then, the stock has moved from the level of 1,200 to the level of 1,450 on back of this expectation. And the last 2-3 weeks, we have been hearing the growing impatience of the investors on social media, Twitter, etc., of why the buyback is not coming through and why the company is not announcing the record date, etc., for the buyback. Now we know the reason why. Sebi has actually told the company that the consolidated debt equity post the buyback will be over 2 times, and which is not in adherence with the rules that are set up for buyback in the Companies Act as well as the Sebi regulations, and that's why they're advising the company not to go ahead with this buyback. Now, what do brokerages make out of it? CLSA says that the regulator is perhaps mistaken in looking at the consolidated financials, and this is the sense that I've been getting from the street as well. Because remember, at a consolidated level, L&T also holds the balance sheet of L&T Finance, and that's why perhaps the RBI and Sebi were a bit worried about the liquidity situation, and they wanted the parent to be well capitalized, and perhaps that's the reason that the company has not been allowed to go ahead with the buyback. But what does CLSA say? They say that this is no setback for L&T's ROE expansion plan. And in fact, what the company can do now, that in lieu of the buyback, instead of that, the company can announce a one-time large dividend, which could be as large as 53 rupees per share. So we'll watch out because the results are this Friday. The stock has already lost around 4-5% in the last week, and the result is also expected to be a tad bit tepid. So adding all of that, perhaps the stock will see a tad bit of red tick. But over a long term, the experts and the analysts and the brokerages still remain positive.
All right, thanks a lot for that. That's as far as L&T is concerned, but let's move from one heavyweight to another one, from the FMCG space. The worst is over for the FMCG industry on the regulatory front. That's the word coming in from Chairman and Managing Director of FMCG major Hindustan Unilever, Sanjeev Mehta. Speaking exclusively to CNBC TV18's Priya Sheth for the first time after taking over, he says he is watchful of the macroeconomic environment and expects rural to grow faster than current levels.
If you look at the last 6 years of HUL's performance, we've added a delta turnover of nearly 12,400 crores. Now, 12,400 crores implies that the delta turnover would be the largest FMCG business in the country. Yeah? And during the same period, our EBITDA has more than doubled. And during the same period, while the BSE or the Nifty index or the FMCG index has gone up by 1.8 to 2, we have been re-rated because of our performance, and the HUL market cap has gone up by 3.5x. So I would say that look at our 6 years performance, and then you will get a picture on how our focus on the long term has helped the business. Last 5 quarters have indeed been pleasing. We have had double-digit volume growth. On our size and scale, delivering double-digit volume growth is always pleasing. But you have to remember that as the biggest FMCG company, we are part of the Indian macro ecosystem. And while FMCG per se is an industry which is more resilient, still it is definitely dependent on what happens around you.
But when you look at 2 big events that are coming up, we have the budget and we have the elections. A lot of rural SOPs, SOPs for farmers, SOPs for rural allocation, high rural allocation is expected going forward. How will HUL benefit from that?
You know, we are of the firm belief that 2/3 of our countrymen live in rural area. And whichever government comes to power, they will have to focus on agriculture reforms. Yeah? We have to have a focus on wage rates in rural areas. We have to look at it from a perspective of not just in terms of MSP, etc., which does not percolate on all the crops or in all over the country. But how do you do reforms where India kind of becomes the granary to the world?
So rural has been growing 1.3 times that of urban for HUL.
It should be growing at a much faster pace. Yeah? Look at it, that you're talking about a per capita consumption half that of the national average.
When you talk about pricing, 2 to 3% has been the kind of price growth that we've seen over the last quarter. Is there scope for further hike in prices? Are there categories that you would like to call out which could perhaps be categories where you could drive growth through price?
Let me give you a philosophy of a pricing. First is there is no one-to-one correspondence between input price and the final price of a finished product. We look at all lines of the P&L, and when the prices go up, we try to optimize other lines of the P&L. And we always are circumspect about pricing. We take judicious price increase. We try to protect the price point packs, and then we play the portfolio game. You will see we have number one category positions in nearly 85% of our portfolio. And in this portfolio, invariably you will find we straddle the price benefit pyramid. If you look at our history, in the last 29 out of 30 quarters, we have improved our EBITDA margin. The only quarter where we did not was the demonetization quarter, and there too, because we did not shy away from investing behind the brands for the long term.
Okay, some data point at the bottom of your screen regarding the Chinese GDP. So January to December GDP growth has come in at 6.6%, and this is versus the market expectation of 6.4%. So a tad bit better than expected. And even the industrial output for the month of December has come in at 5.7%. And that's the reason the Asian markets are recovering a tad bit. So Nikkei is up around 0.5%. Kospi is also higher. The Hang Seng as well as the Shanghai index was up around 0.8% the last time I checked. So the data coming in better than expected.